Hey, I want to welcome you all back again. We're going to do an update on my M1 finance portfolio. It's been a few months, so I want to touch on that, see how much money we made, see how much dividends we've gotten this last month, October, and we're going to dig right into that. So let's first go into the dividends. So let's go right into here. So for the month of October, let's punch that in. I'll just skip these November ones. But so I got NRZ paid me $315, MFA $264, Gladstone $56, Chimera Investment $54. So as you can see, we've got a lot of dividends. I'm not gonna go down and say them all, but you can take a look here. Just a ton of companies paying out, but they're all pretty small. And it goes back a bit here until we get back to the end of October. So that actually adds up to be about $49.81 in October. It's not a ton, but October is kind of an off month for me because I have a lot of quarterly payers, a lot of quarterly dividend payers. So you'll see November will be a lot better for me. And you can see this in the fact that in October we got $49.81. And in November, if you go back here, you can look, in November, just 4 dividends in one day, I'm already up to $23.69. So that's already half of what October was for the whole month in one day. So, that's not bad. Now, I want to touch on the fact of my actual portfolio too. So when I started with the videos back, it was August 18th, and I had $29,746.94 in the account. So now, fast forward 2.5 months, and we're looking at right here $31,427.34, and that's not bad. I mean, that's a difference of $1,680.40 in 2.5 months. That's really not bad. And as you can see on top of that, I still have $37.68 in cash, and I do a lot of that. I'm able to do a lot of that because of what I do with my margin account. So I do have a margin of about $10,000. But as you can see, since August 18th, I believe my margin was at 4.25%. And now, because we've had 3 rate drops this year, a quarter basis point each time, so we're at 3.5%. So even though I've borrowed no more money, I've literally not added to my margin since then. The amount I actually pay for that same margin has gone down by 0.75%. So that's pretty nice too. I save money. I do have some more margin available. If I do want to touch it, I have 900 more I can take. I've just been kind of letting that play. I like having this 51% safety maintenance call threshold. I like to not be right on the line, so I like to leave that. And another nice thing about this too with my margin is, so even though I pay 3.5%, if you look at my actual dividend portfolio, right? I get paid for my dividend yield after you average it all out, 4.25%, right? So even though I'm paying 3.5%, my dividend alone on that borrowed money, that $10,000 pays for itself to borrow itself. So the nice thing about that is any gains after that are free. They're mine, even though none of that money is mine. So 10,000 of that dollars in that account is borrowed money, but I still make money on that borrowed money, which is nice, even though it's not mine. The expense ratio on my account is a very, very small expense ratio. Most of the things in my account are individual stocks that don't have expense ratios. There's very low ETF amounts, or a very small part of it is that. So, overall, not bad. The account is doing pretty well. I mean, I would say $1,600 in 2.5 months isn't bad. And the thing with that is, if you look at my portfolio, you can see, all of a sudden this massive jump. And this is where I transferred another account into my M1 account. And I think I stopped putting money. My cost basis is somewhere in this range, the 29,000. So as you can see this is all paid for by me. But after, you can see this growth starting to happen, and it's slow. But right now we are in a nice kind of a boom, I would say. The stock market is lifting a little bit. There's some good news going on with maybe a possible China trade deal. So that's kind of pushing it up, which is really nice. It's nice to see some profits. For a while there, it was up, it was down, it was up, it was down. And it really wasn't doing a hell of a lot, which was, it is what it is. I was just buying it when I could and putting money in. So, I mean, not bad overall, though, for that to be going up like that. As you can see, my holdings, my total net since I've started, which really hasn't even been a year, has been, $2,250, which is not bad. I mean, that's almost an 8% return. I'm not going to call it phenomenal, but I mean, I've just started with stocks not too long ago. It's been, like a year roughly. So not bad, And a lot of these stocks, have performed, some of them have performed far better than I expected. I want to say Apple is one of those stocks for me. I don't want to look for it too much. Right here, 50% of my money. So, I mean, I haven't put a ton of money into Apple, but I had a pretty ridiculous return on Apple. So that's not too bad. You know, there's a couple others, Independence Realty Trust, and there's some, you know, people were beating on some of those REITs I have. And personally, you know, well, let's look at that right now. And, you know, I'm doing pretty damn well on the REITs. At this time, though, VNQ is still beating me, even though it is a close race, because I had VNQ before I had this ETF I made myself. So, you know, it did have a leg up on the race, but I mean, it's still pretty damn close. And there, as you can see, they're a big chunk of my return right now, my profit. You know, the fast food section here is only doing 1.5 almost percent. You know, my big funds 3.5%. And, you know, tech is kind of dragging behind right now with 2.5%. But as you can see, like my services, which is, you know, this is all your businesses like Sunoco, AT&T. I mean, these are blowing it out of the water. Walmart, Verizon, Tesla, phenomenal growth overnight. That was kind of crazy, huh? And, you know, you're seeing things like that. A couple others that kind of shocked me. You know, Ford is down a little bit. That was my offset just in case Tesla doesn't do well. So it was kind of my give and take there. It's a little bit of offsetting the risk. A couple small other ones, Tractor Supply, not huge though, Cisco. But a lot of the other ones, Home Depot killing it, Caterpillar killing it, you know, Tesla definitely killing it. That's a big one. And AT&T definitely kind of shocked me too. I wasn't expecting AT&T to go up 22% real quick like that, but I'm just happy to see that. So as you can see, some of these are pulling behind it. But if you click into the fast food too, there are some that are doing pretty well. Right now, maybe not so much. You can see some of them are down. McDonald's is down for me. Coke's doing okay, Wendy's doing okay, but some of these other ones are kind of sinking a little bit. So it's kind of pulling it back this time. But still, overall, not a bad up on the thing. As you can see from when I started my M1 portfolio, it shows a 4, almost 5% weighted return. But on my actual total holdings since I've started, we're at, you know, an 8%. So it's really not bad. We'll give it more time. I'll keep trying to update you guys. I just don't want to bother you too much. If you guys do want to see more updates, maybe a monthly dividend update, I can do that. Just leave it in the comments below. Don't forget to smash the living hell out of that like button. I really appreciate that. And I'll definitely be back to talk with you guys again. And I just want to thank the community for growing with me here in the portfolio. Thank you. Bye.